Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video of Spotify stock, ticker symbol SPOT. I'm looking at this to see what the intrinsic value is so I can decide if I want to buy and kind of have a thesis for if I think it's overvalued or undervalued. Spotify is obviously in a strong market position. Spotify is the global leader in music streaming with a massive subscriber base and very strong brand recognition. It's also worth noting that, as with all music platforms, once someone gets onto one, they're very likely to stick around because they don't want to move all of their, music libraries somewhere else and recompile everything. What's interesting about Spotify and all these other companies is that they're not necessarily monopolistic. They all kind of offer the same sort of products in terms of song catalogs. They're all very similar. If you go to YouTube Music versus Spotify, it's not going to be that much of a difference in terms of the selection quality or the things that you can get, except for with some exclusive podcasts and audiobooks that they're adding to the platform. They've been very heavily investing into podcasts specifically. The most obvious example is Joe Rogan's podcast moving on to there. Paid him a ton of money for that. I also think there's a lot of profitability potential in Spotify. After years of investment, Spotify is improving its margins and aiming for sustainable profitability. There's revenue growth. The company continues to grow its revenue through premium subscriptions, ad-supported users, and expansion into podcasts and audiobooks, obviously. And also, I think AI is going to massively transform this company. Spotify's algorithm-driven recommendations and AI-enhanced content discovery keep users engaged and improve retention. I think that with the advent of AI, Spotify is going to learn a lot more about their consumers and be able to, one, recommend better songs for the users, which is going to make more users want to use the platform. So I think AI could definitely boost this stock. They're also going to be able to figure out more about their users and deliver better ads. So they're going to make more money off the advertising as well. So I think Spotify is in a very unique and good position. However, my biggest problem with Spotify is what I was talking about before, where they don't really offer anything necessarily super different or special other than the podcast, but they are the leader. And that's very important when you're in any kind of industry. The biggest company, especially in this kind of niche industry, the biggest company that has the most users is going to be able to retain the most users, and thus they're going to benefit the most from improvements in technology because the user base is already there, and I think that they're going to just continue to grow and make the platform better because there's a lot of revenue coming from them. And you also have to consider that Spotify only does this one thing. Whereas with Apple Music or YouTube Music, management's focus is definitely on the music side of the business, but it's not their main concern. They have a lot of other things they're trying to juggle. So I really like that Spotify is concentrated into this industry and that they're going to be mainly focusing on just this one thing because it's very profitable and they're obviously doing something right. Spotify stock is currently up 171.81% over the past year. This is a massive gain, obviously, and there's a lot of high expectations for this stock to perform. I wish I would have valued this stock earlier, but sometimes you're just late to the party, right? And that's kind of my situation. Obviously, everyone wishes in hindsight they could have bought a stock that went up 171% in a year, right? But the market cap is 128.09 billion, which is pretty substantial. And the price to earnings ratio is 112.35. So pretty high, but I think that comes with the expectation that there's going to be extreme growth and that the profitability is just going to get better and that AI is going to really help this company. Moving on to the analyst forecasts, the 28 analysts with 12-month price forecasts for Spotify technology have an average target of $529.96 with a low estimate of $230 and a high estimate of $730. The average target predicts a decrease of 16.9% from the current stock price of $637.77. Average analyst rating for Spotify technology stock from 29 stock analysts is a buy. This means the analysts believe the stock is likely to outperform the market over the next 12 months. So what I'm guessing is the price targets here just haven't been updated for some reason. Maybe they had earnings pretty recently or something like that. But if the majority of analysts are obviously bullish on this stock long term, because there is going to be probably more significant growth than most other companies, that's just kind of the nature of the game when you're looking at tech-centric type of companies, especially one as massive as Spotify and also as unique as Spotify. I think that Spotify can continue to take the money that's coming in and invest it into putting more content on the site that makes sense for the site, right? I think that Spotify needs to really just make more exclusives and also just make the actual algorithm better and make the overall service better. Because if they can differentiate themselves with a lot of different products covering a lot of different niches and really compel artists to want to be on their platform, I think that Spotify can really just start taking more and more market share and use the fact that they're bringing in so much cash to kind of bully the other music websites out. They want to just be the massive conglomerate, the place where people are buying music. Now, Spotify also is just the most general, probably just overall best of these companies, but there are certain niches that I don't think they're going to be able to break into. For example, if someone's already using YouTube Premium, I don't think it makes sense for them to want to get a Spotify account because they can also use YouTube Music, I believe. I don't actually have YouTube Premium, but I'm thinking there has to be some kind of synergy there. And then along with Apple, if you're already on the Apple ecosystem, you're way less likely to be wanting to go to another ecosystem, right? Apple's very good at making people want to stay on there. And as a result, Apple Music kind of just has a very loyal cult-like following that isn't as large as Spotify because obviously there are a large amount of people who don't own Apple products. So I think if Spotify can continue to be the big dog and just continue to leverage their strength and improve the product and just focus on this one thing, I think that they can be the best at this one thing. We have the weighted average cost of capital for Spotify. As you can see, the majority of the value is in the equity weighting, making up 98.48% of the total weighted average cost of capital, with debt only comprising 1.52%. I think that this stock is getting punished a little bit for its positive performance because the beta is significantly higher than the S&P with a 1.56 beta, which is not common for a stock with this high of a market cap. But again, they've run up so much, so they've deviated pretty significantly from the S&P. And that hurts when you're doing a CAPM. So I actually think you could probably go with something a little bit lower than this if you're modeling on your own. I decided to just go with it. The expectations are pretty high. As you can see, I put in a 20% growth rate for the free cash flow over the next 9 years, and then a perpetual growth rate of 2.5%. If it grows 20% for the free cash flow, which obviously the free cash flow here is 926%. I think that's obviously because they were putting money back into the business to kind of grow and make the product better, and that's why the cash flows were so low when you see going from 2022 to 2023. That's a 3,100% gain, which is obviously ridiculous. You shouldn't expect that. The revenue growth has been pretty consistent, though. So I actually think that we could probably model it off of the revenue growth and be fine there. Because once Spotify gets to a point where the cash flows are actually consistent, I also want to talk about, because I don't know if that's even necessarily realistic, because AI is to get into. It's going to make them a lot of money in the long run, but I think investors need to be patient and need to see that significant capex is going to need to be invested in order to be at the top of the mountain like Spotify is. So if they want to maintain their spot, which I don't think they're in any risk of losing their spot where they are. I think they're going to be the biggest music streaming platform. They have to adapt though. And I think that Spotify is in a very unique position to be able to adapt. And I think that Spotify can continue to make money and continue to make gains going forward, right? Here with the 20% free cash flow rate growth, I have a current DCF fair value at $655.02. Now, if we change this to the 17.52%, we see that there's 12.57% downside in the stock. I have to be honest, I think if you've already invested money into Spotify, you should probably hold. I would rate this a hold. I think that there is significant growth here, but I think you have to be very greedy with when you actually invest the money in. And unless you're looking at this from like a 5-year sort of lens, I don't think that this is something that you should necessarily get into, because the product is not monopolistic, as I've talked about previously. And the company doesn't it's not like a huge behemoth of a company. I think that there are better opportunities out there. I've talked at lengths about Amazon. I can't see myself putting money into Spotify when Amazon exists, right? I just can't do it. And that's personally how I am. But if someone's already been invested for a while, I think that they could either, one, trim a little bit of their position, take some profits, and, invest it in some other things, because I think the stock has run up pretty significantly. And, if you own this stock and you have owned the stock for a while, just pat yourself on the back, because that was an awesome investment. But I don't think anyone should be necessarily buying into this, and this is obviously my opinion. I just don't see. I think that there's way too high of expectations, and they have to get too many things right. And I'm also not an expert in the music industry. I don't understand the deal splits that Spotify necessarily has compared to YouTube Music, compared to Apple Music. I just don't have the full understanding and background to reasonably say that this stock can grow the free cash flow on average 20% a year. I think it's very possible. I think that if you bought this today, even at this price, in 1 year, you will probably be up. If I had to wager money, I think it's probably like an 80% chance that this is going to gain value in 1 year or be worth more money in 1 year, because it's clear that they're doing a lot of things. I mean, it's just clear by the free cash flow and just the fact that they are the number one streaming brand that they are doing the right things. They are putting the necessary money into the business. I'm glad that they actually don't pay a dividend, because this type of company that doesn't pay a dividend needs to be putting as much capital as they can back into the business to grow. And I think that eventually, when this becomes a mature company, this is going to be a very lucrative company to hold, because when they start paying dividends, or if they never pay dividends, the value in the stock is going to be very high. But I just think that there's better options out there, and that it's too pricey for me, and that expectations are too high, and that it's not monopolistic. So for those reasons, I don't think I'm going to want to look at this company, but I could completely understand if someone would. Now, if we run it through this, if they're able to grow the free cash flow by 25%, you have 41.7% upside. And if we go completely conservatively at 15% growth, you have a value of $473. Now, 15% free cash flow growth is still pretty good, but it's obvious that Spotify has extreme expectations for them, and that they basically can't make mistakes at this price. This price is, it's not Tesla prices, right? But it's pretty high. And, let me know what you guys think. Let me know what you guys think down in the comments below. Hit that subscribe button if you made it this far. It really helps me out. And thank you guys for watching. Bye.